Hi, welcome to this video day, 28th of March. It's Sunday. Just going to look at the USD in this video today. Got quite a few pairs to look at. We'll go to the charts in just a moment. Now, in terms of the best trades, what we like is the fundamentals that are clearly in favor of one currency over another. The sentiment should back up our view as well, and we want good technical levels of support and resistance to key off to get good risk to reward trades. I think in terms of the USD, we've got that. I'm just very bullish of the USD, and I've done quite a few videos on it recently. It's shown really good strength recently overall, and I think there's more to come. I wouldn't rule out a pullback in the USD this week, but I think that pullback would be a buying opportunity. Now, what we are going to do is we are going to go and take a look at the charts, but just before we do so, please do keep in mind it's my view as of this specific moment in time. It can of course change in line with the market action and conditions. If you want to learn our trading strategy, all our trading techniques, and see our analysis of 14 FX pairs daily, you can get live access to our member center on the link beneath this video. You can also join our Facebook group of traders, follow our Facebook page, and check out our Recommended Regulated ECN broker. Now we're going to go and take a look at the charts, and just before we look at the individual pairs, I want to look at some charts that relate to the big fundamentals that I think are going to drive the USD higher, and also the sentiment towards the USD. Just going to use the charts on our member center as I've been doing some updates. So right, let's go and take a look at them. Right, first chart we're on is the T-Note 10-year weekly chart, which is part of the US bond market. And in terms of keeping your eye on this market, if you're trading the US dollar, you should. For anyone unfamiliar with bonds, I'm just going to explain quickly why they are so important. What you'll see here is a gentle rise, and then we see an accelerated rise. Now, if bond yields go up, it's basically the cost of long-term US borrowing. So basically, if you were to buy the 10-year note, you get 1.66 as a yield. That's a pretty good yield against other bonds, okay, other major nations. And, you know, when the bond market is rising like this, it indicates a good economy and also inflationary pressure. So you could look for interest rate rises further down the line. Now, in terms, you've probably seen this in the media, the Fed say they're not going to be raising interest rates anytime soon. They don't believe inflationary pressure is going to last. The bond market does not believe them. You've got a huge stimulus package in the US now from the Biden administration. The US economy was doing okay even through COVID. Now it's really going to pick up steam. So you've got good bond yields for the USD, and also an economy that's picking up traction to the upside. I just want to go to a chart of expectations for US growth against other G9 nations. Okay, so here's that line, US growth expectations, and there's the dollar index, which is the dollar measured against a basket of currencies. Now, if you look at the growth expectations for the US against other major economies, it's gone vertical to the upside. Now, you'd expect in normal circumstances the dollar index to be much closer. You can see how close it is throughout this chart that goes back to 2011. Dollar index is lagging. It's going to play catch up. Okay, the US economy doing very well. It's going to get better. Okay, dollar index, we think dollar generally will rise. Now, I just want to go to my next chart, which is positioning in the USD. Now, when we first got interested in buying the USD, these three groups here, three key groups on the COT net traders positions were heavily short. You can see they're covering out shorts. So leverage funds are now just marginally long. You've got non-commercial traders coming in. Well, they're not coming in, they're covering shorts, and we expect them to end up long. And you've got a big group called asset managers. This was a record short position for them. They're starting to cover shorts, but they've got a long way to go to get to the plus side All three groups will go to the plus side in our view, and that will boost the USD as well. Trying to think, is there any other charts I want to look at? Yes, there are. I want to look at this chart here. And what it is we're going to be looking at commodity currencies and emerging market currencies. So what we want to see is how traders view commodities. This is the latest BOFA data. Investors are holding their highest allocations ever in commodities. I mentioned this last week, so apologise for mentioning it again for regular viewers. But for new viewers, last time these levels of optimism were reached, Brent oil was over $100. Global economy's in worse shape now than back then. Obviously, people have bought commodities, based around the idea there's going to be a strong global recovery that's priced in. Commodities obviously priced in US dollars. If the US dollar rises, the speculators who built up this huge long position here get flushed out the market. That will pressure the commodity currencies and emerging market currencies. Okay, one more chart in relation to this. This is Bloomberg Commodity Index against the DXY inverted. So the dollar index inverted is obviously going down here, but this is dollar strength. Okay, what you'll see is basically the gap is too wide. Commodities will fall if the dollar continues to rise. Too many speculators long of commodities, and we think they're going to get flushed out. So this is a little bit of background to the dollar. Now what we're going to do is go and look at the individual pairs and start with some majors first. All right, first pair is Euro USD, and I'm only going to cover this briefly in this video. I did do a full video on the euro earlier on today, and I forgot to release it to subscribers, but it goes into the Euro USD in depth, also covers Euro GBP and Euro JPY. But in terms of Euro USD, just very quickly, we've seen a really nice fall. Okay, now in terms of the euro, we think it's going way lower. I've got 116 as my level here on the daily chart, and then 110 on the weekly chart. Everything is against the euro in our view. Bond yields are low against the US, negative rates in Eurozone. The economy is just really struggling because they're messing up the vaccinations in the zone. Okay, they've got to get to grips with that quickly. Just generally, the euro big fundamentals are against it. And in terms of sentiment, I've noted it here, despite the big fall in the euro this year, you've still got speculators holding a really sizable long position. Okay, that points to them getting hit on stop in our view. That should take us to at least 116, then obviously we're looking for 110. Short term, I think you could say the euro is a little bit oversold. So if we pop up to this level here, first level resistance is 118.50, just sell back through 118. If we get up towards the 119 level, which is a huge level for the euro to take out, you come in the market on any weakness whatsoever. Okay, in terms of our trade, we're at 119.60. A lot of people ask me, why don't you just bank out? You got 160 pips. But you don't really want to take that sort of profit. Yeah, we're trying to get big trends. What we've said in previous videos is that if you've got enough in relation to a trade, why not just take half? Because if you take half in, if we rally up, you get in at a better price. You're still in. If we turn lower, you can pop your trade in back through the double bottom here. Hopefully that makes sense. But you do have in a lot of pairs at the moment, kind of, you get the trade running your way, then you get the retracement, which can be frustrating. I think, taking 50% in when you've got enough is a good idea. We do it all the time. Okay, just want to smooth the equity curve. You won't get the best, but you won't get the worst either. So more weakness in the euro expected. Let's go to the next pair that I really like the look of, which is AUD USD. Obviously a commodity currency, and we have seen some weakness down to there. Then obviously we had the rally down, and now we're seeing a bit of a rally. My own view is, I said it earlier, commodity prices are going down. I think the Aussie dollar is just so overvalued. And in terms of the Aussie, okay, how would you play this one? Well, they've got double trend line resistance here up towards the 77 level. So you could come off that level of weakness or just take a break below the round number 76. So these two little tails, just let them get cleared out. I think we could go to 72, and I might extend my target down towards the 70 level. So the trend is down, but I wouldn't rule out a bounce. Okay. Next pair we are going to look at is another commodity currency, which is USD CAD. I really like the look of this one as well. In terms of USD, it hasn't really shown that much strength against the CAD. Okay. But this tail here, I was saying it last week, that for us is a reversal in terms of we come through a round number. Round numbers always very important because there's always a lot of order flow around them. No more sellers down here. Nice strong blue. They'll work our way to the upside. They're 3 low volatility candles. Okay. I'm looking for a breakout above this level here. So 126.20 to follow through up to hopefully 130. Okay. So yeah, very bullish of the USD. This has been the pair with the USD, the 3 commodity currencies, but the USD hasn't shown as much strength as it has against the AUD and the NZD, which is going to be the next pair we look at. But I think we could play catch up and go for the breakout, or if we dip back to this level of support, come in on strength. Right, next pair, NZD, USD. Right, NZD, USD, the trend is down. But after this big red, a bit of follow through, we are a bit oversold in the short term. If you want to get into this one, it's a bit similar to the way we were saying to trade AUD, USD. You're back at a big round number here, 70. You break above the round number, just come back through it. Look for a failed breakout. If you get up towards this level here, towards the 71 level, just sell any weakness off the level. Okay. Obviously, if we don't rally, or not obviously, but you come in through this double bottom, I think we're going down to 66. We might even go lower. In terms of the Kiwi, it's been weak in relation to the central bank, the RBNZ. I think it's an established downtrend. Rallies are selling opportunities. Now, in terms of the next pair I want to look at, and it's been a particular favourite of ours in recent months, it's USD CHF. And we noted in previous videos that when we got here, speculators had a 10-year high in terms of short positions. We did run on a bit to the downside, but we expected a big rally, and a big rally has unfolded. You had a correction there, and now we're going off to the upside again. Really decent profits in this pair, well over 400 pips. I think there's still more to come. I think we're going to get to the 96 level. We could get even higher. To show you the weekly chart of USD CHF, base out, decisively take out the 20-day moving average, this green line, which had really kind of held rallies since, when is it? Since May of last year. Decisively take it out, following on quite nicely. I think we'll probably get up towards the 96 level. So up here, might get even higher. Okay. So yeah, so sometimes with a trade, and this trade is a good example, you have to be patient and wait for the big move. But in this occasion, patience, yeah, it worked out really nicely. I've cut my exposure in this pair now. But yeah, I'm going to let the my 50% I've got in run. We shall see. Next pair. This pair has been a horrible pair to trade. I think I said it last week. It is actually US dollar Norwegian krona. It's correlated with the euro, and also it is a commodity currency. Norway is Europe's biggest oil exporter, but it basically is just chopped sideways. Okay, I'm looking for the euro to really gain traction to the downside, and obviously commodities to fall, and crude oil to fall. In terms of crude oil, there's a lot of fuss made about that ship trapped in the Suez Canal. I'm not sure how important that is. The world is awash with oil. I'm just expecting a breakdown in oil. We've got a small trade in here. I want to add on a breakout above this level here. If we break the range, the USD should really gain traction to the upside. And if we do break the range, I'll bring my stop up. It's presently behind this level. I'll probably bring it behind the low, this candle here. That's obviously, we don't move lower. Okay, so we'll see. USD knock due a big rally. One currency I really like trading is USD Swedish krona, another euro correlated currency. And we've seen some nice upside. Okay, we had a bit of a retracement there, but up. And I think we're going up to 9. Okay, a little bit of retracement on Friday. Got double trend line support. If we flick through here, should be off the upside, and the stop, which is presently behind second level support here, will move up behind first level support. The euro, I think, is really going to weigh on the proxies or correlated currencies. And two currencies I really like the look of as long-term trend following trades. So the US dollar against the Czech krona. US dollar moves up here strongly, comes back, we base out. The 20-day moving average provides support. Now we're trapped in a little range. If we break out to the upside, we should go up to 23.50. Then I'm looking for a move up to 25. I really like the look of this one. Let's have a look at USD CZK weekly. So I'm looking for a move back up to here. That's longer term, okay? But we've come up, we've taken out the 20-week moving average. We're trading above it. Just buy the breakout on the daily chart. Next one, USD PLN. It's been a really good trade for us. Managed to grab the rally and keep holding it, basically. And again, this is going up, in my view, further to 420. Again, the weekly chart, USD PLN. Nice big strong move through the 20, and it follows on. Okay, 420 up here. If we look at the Eastern European currencies, they are so reliant on the Eurozone in terms of exports, so the zone just really struggling. Okay, any other currencies we want to look at? USD MXN, sorry, I scrolled past it. USD, a really great rally there. Then we came back up, back to support. I'd like to see us get through here, and I think we should be off the upside. In terms of the emerging market currencies, they're heavily reliant on commodities as well. So looking for the USD to move up on the MXN. I think if I was to say my favorite emerging market currency, I'll just show it to you. Well, the biggest allocation for us, it's here. It's USD ZAR. Come up quite strongly there, but that's a really good retracement, almost back to these chart lows. Okay, so here, the 1450 level, but we base out before the 1450 level, kind of gaining a bit of strength. I want to break out. I've got position in. I will add, and I think we're going all the way to 17. If we break out, the stop will come up behind this first level of support. Presently, it's behind the second level. So if it did come down a bit, I could probably add a bit more, but I've got the feeling we'll break out to the upside. Okay, last pair I'm going to look at, no, the second from last pair I'm going to look at, sorry, US dollar, Singapore dollar. This said it's a bit like the Swiss franc. It can trend really well. You had a big trend to the downside, kind of sideways here. And then we have a big move to the upside, base into this 134 level, and kind of move it up. Red on Friday. I think we're going up to 138. I might extend the upside target here. If we break out above 135, clear of this double top here, I'll bring the stop pretty close. Okay. But yeah, more strength in the US dollar coming. If you look at Singapore, it is really reliant on global trade, very sensitive to global trade and the outlook for the global economy. And I think traders are way too bullish on the outlook for the global economy. It's not in great shape. And the market has been fixated on this really, really strong global recovery. That's why they bought commodities to such a degree. We don't share the view, but if the view is correct, then it's in the price. US dollar going up on the Singapore dollar. Last pair for the brave, this one. It's USD rub. Last video we did get decent trade up and I stopped myself out, okay? But the stop really, really close. I just want to come through here. Any strength and then look for a move to 80 with a tight stop. I'm looking for crude oil to get hurt. Obviously Russia, huge crude exporter and a huge commodity exporter as well. For just a small position, I think the risk reward is very attractive. Obviously, if we dip back, came back towards this 20-day moving average, I would look to buy the USD on strength. So US dollar, for us, we're very, very bullish. We think, possibility of a retracement in many pairs in the coming week. But from the perspective of the fundamentals and the sentiment behind the charts, just points to more USD strength for us. We shall see. And that is the video for today. Thank you very much for watching it. Take care. Have a good day.